if we're right and Solana does what ETH did in 2018 onwards, it's 45x.
In today's video, Raoul, the co-founder and CEO of Real Vision, takes over the helm to update us on what's driving global markets, his big picture outlook, and how AI is going to change the way we work.
You think that an ETF would open up a whole new bunch of capital coming in?
Well, as long as the ETF doesn't trade like a closed-end fund, you're okay. Because it's the discounts and premiums to NAV that's the real problem for people. And also, an ETF, for most people, is more like an equity, while the GBTC is more like a fund.
Okay.
So they just want to see whatever it is on their screen, trade it as a normal stock. People are lazy. I mean, people just generally are lazy, and people will generally follow momentum. So if you make it easy and momentum's rising, it's going to work without question. And BlackRock have the Aladdin system, which is, their kind of major system for all of the products and everything else. That is used by a lot of RIAs, a lot of capital allocators. So once you've got the product on that, okay, that's pretty useful for people as well. So we will see, it's just the access that I can do it via BlackRock. It means it's sanctioned by the state and everything's okay. I mean, that takes a lot of uncertainty out of Bitcoin, right?
From a distribution point of view, from an access to funds point of view, from a credibility point of view, I just can't imagine a better scenario. I mean, surely it's better than getting...
Yeah, if you take your emotions out of what you want the space to be, and you want the new up-and-coming people, Bitwise, because I like Hunter and stuff like that. But you're right. If I want the space to attract capital and get larger global recognition, BlackRock is exactly the right person to do it.
What's the counter? What's the counter argument? What's the part that we say take your emotions out? Where did the emotions come in?
Well, the emotions come in that BlackRock is at the epicenter of the global financial system. It's like Goldman Sachs launching an ETF on Bitcoin, and people want to wrestle this away from the existing incumbents, and I think rightly so. I mean, the whole reason for this space is to create a parallel financial system, and what they're trying to do is bring it in just as a regular asset into the system. And I can understand why, at an emotional level, I don't really like BlackRock doing this. But for a bags level and for an adoption level of the space overall, yes, it helps. But the narrative of changing the system, this is not changing the system. Emotionally, I would love to see it differently.
Yeah.
But I think it's exactly the right answer as BlackRock. So I'm with you.
Yeah.
I don't really want everything to be custodied at a centralized level in a global financial institution. But I'm willing to accept that for the extra adoption, because the space will figure it out over time. More people will self-custody stuff. More people will do other things, build on top of the network. So no, I think it's great news. Although I do think there's probably a lot of institutional interest in ETH, and I've talked about this before, because of the yielding properties of it, and because the narrative is not so much about here's a new global money, we're going to fight the system. It's like, here's a technology, you can use it. So that's much easier for most investment committees at institutional level to agree with, and to have an asset, a long duration asset that has a 5% yield. People like that. But I don't think that the US is even close to allowing ETH yet. And, knowing how these people work is, even if they did, they wouldn't give you the yield. So BlackRock would take the yield from you, and you just get the price appreciation. It becomes a very attractive product for them to do something like that, because they get kind of implied 5%. It's what they do with stock borrow in other ETFs.
Are you backing Bitcoin or are you backing ETH?
Same answer. I'm a very long-term time horizon guy. I don't change stuff around. And my thesis is, when I look at the monthly chart on a log scale of the Bitcoin ETH Bitcoin cross, it's a big wedge pattern. I know what drives the ETH Bitcoin cross. It's driven by the business cycle and where you are in the liquidity cycle. We're at the turning point where we should start to see, over the next coming couple of months, ETH starting to massively outperform. It's, I've written about this in several of my Global Macro Investor and Real Vision Pro Macro articles. And so it's just a matter of time to me. Now, how this works, Ran, is pretty straightforward. Let's say BlackRock ETF. Money comes into the space, money gets recycled, it flows into other stuff. These things have a smaller market cap and are less liquid, so the alts do that. It's the same that happens in emerging market stocks, credit, junk bonds. It's always the same. So as you move out of US treasuries into bonds, into emerging market bonds, the least liquid ones rally the most. So that's what I think happens. But there's been a bit of return. I mean, there's been 20% difference over the course of this year. So 20% is a reasonable amount. Does that trend continue ad infinitum? I don't know. Is there another 20% in it? Probably not. So if you want to move around some tokens for a 10% gain, go for it. But I just find, once you've just had a god candle like this week where it's up 20%, it's like the 10% extra. It's just a lot of hassle for a limited gain. Just the space itself as well.
Do you think that this is the same trade on a macro level? Like, do you think that the Solana trade is peak fear now?
Yes. And so I bought Solana into the chaos of last year, both in June and then the FTX, the end of the year. And I think it's the same thing now, is like, if it gets another leg lower, it's a gift. Because of the points that you raise, is that the network activity is very good. There's a lot of activity going on. There's a lot of people doing stuff. So that's the idea for me, is like, if we get better prices, I love it. I missed that last dip that we had, a couple of weeks ago. That was a shame, because that was a gift when it went back down to 12.5, 13. If we're right and Solana does what ETH did in 2018 onwards, it's 45x. So does it matter if you make a 30x? No.
So
obviously it does compound quite a lot from cheaper prices, but no, it doesn't make a difference. So it's just ego of like, I caught the low and I'm brave enough to ignore the FUD and take the opposite view.
What else are you getting into? What else are you thinking may be a good buy at the moment?
So my general view on this is I have no edge when it goes to smaller stuff. I just don't have an edge. I just don't have the ability to focus on it. I set up an asset management firm, Exponential Age Asset Management, to deal with this, because that's a fund of hedge funds, and we invest in digital asset hedge funds because those guys spend all day, 24 hours a day, staring at the screens, looking at what the opportunities are. And it's better to give it to somebody who knows what they're doing than somebody like me who doesn't know what it's doing when you're going further out the risk curve. I just don't know. So it becomes a crapshoot for me, because I'm just not as focused, for example, as you are in the space where where I'm really looking at those kind of opportunities, because I'm a more macro guy.
I mean, I think it's great that you have the courage to say that. I mean, it's great to hear that you just say, look, I'm a Bitcoin ETH. I can go down to Sol, but that's where I stop, and then I ride the macro.
Yeah, I've got some stuff. I've got some leftover stuff. I've got a bit of Matic. I've got a bit of I've got some stuff, but it's not meaningful positions. It's really just to keep it on my radar screen. But I just don't have an edge, so I'm not that guy.
So you're playing the index. I mean, I guess you could say you're playing the crypto index, but playing Bitcoin, Ethereum, and Solana, you're pretty much playing the index. Solana's maybe a little bit of
I'm still 85% ETH. 10%. It's like maybe 80% ETH. The rest really Solana and a small amount of Bitcoin. I don't own much Bitcoin.
What do you think happened that made them all increase their year-end dot plots?
I think it's about expectations management. They really don't want people. There's a big narrative right now saying as soon as the Fed stop, inflation's going to go up, right? That's the most pervasive narrative in financial markets. I don't believe that narrative, but their job is to manage inflation expectations. So they want to do this hawkish, and they've done this before, the kind of hawkish pivot, which we're going to pause, but we're going to come back and beat you over the head if you dare think inflation's going to go up and try and price it. Now, that's not uncommon. Alex Gurevich wrote about this recently. That's a pretty standard way that the Fed operate. 2019, 2018 when they paused in December. Similar kind of narrative. It's like, we're watching you guys, we'll come back and beat you over the head. But every single time the Fed have paused, the next move has been a cut. 100% of the time. So
you think the market is? You think the market is absolutely wrong here? Do you think like when the market says one more rate? Okay, hold on. Now the market's repricing at one more rate hike.
Yeah, I think for that, that odds will move around what economic data we get. So I don't know did we get the?
We haven't got CPI yet. We haven't got CPI yet.
No, but look at the global manufacturing PMI that just came out. It's at 46.3, which is full recession territory. So, if the ISM, my view is the ISM, which is about the same level, 46 point something, I think it'll end up being somewhere in the low 40s. That's a good enough signal there's ever been that the Fed need to stop. All of my forward-looking indicators show inflation is imploding. All of them show that unemployment's about to rise. All of them show that rents are going to come down. All of them show that wages are going to come down. I don't see what everybody's talking about. People are just pulling up a chart of the 1970s and saying, oh, that inflation's going to come back differently, because they're trying to impose a narrative.
You keep talking about global liquidity. You sound like you're a bull on global liquidity. You feel that global liquidity is about to explode. I think I've even read tweets where you've said it's going to explode for the next decade or something. What makes you so bullish that we're getting into such a big liquidity cycle? I know Japan is putting money into the system and now starting to suffer an inflation problem. What makes you so bullish on liquidity?
So I've done a lot of work on this over the years, and it all came together in something called the Everything Code. You hear me allude to it. You hear people talk about it. I've done a few podcasts on some of it. But what I've basically figured out is that I think liquidity in terms of central bank balance sheets is forecastable out to 2 or 3 years. And asset prices, like the NASDAQ, is correlated 97% with our liquidity indices. And therefore, if I can forecast liquidity out 2 years, I can forecast the NASDAQ, Bitcoin, Ethereum out for 2 years. Now, it's still a hypothesis, but it is based around an enormous amount of work about what happened after 2008, I think the big reset that everybody's waiting for happened in 2008. All debts were basically forgiven by saying all interest rates are going to zero. So you don't have no burden to pay your debt. Everybody reset their debts in 2008, and they all reset them into 3 to 5 years. Every government and most corporations. So what you've got is the economy now, every 3.5 years, rolls over as you come through the debt cycle. And every 3.5 years, all of the interest due on the debts gets monetized by the central banks. So they're all monetizing. And I've tested it out and done a load of work. The US, the UK, the EU, Japan, they're all doing the same thing. They're just monetizing the interest payments on the debts, which means they've got a credit card to pay off their credit card interest payments. And that's debasement of currency. So it's not really liquidity I'm talking about. Liquidity is a proxy. It's actually the debasement of currency that's the predominant driver.